Hi, this is Tom Nunemaker with Airmere Corporation. On the futures.airmere.com, I added a new tool called Prop Firm Funded Growth Calculator. It's on the Tools menu down here in the bottom of the middle column. It could change in the future, but it's on the Tools menu. And if you go to the Tools page, it's down near the bottom, and it's this link right here. So we have quite a few options. So the way that this came about was that I have some funded accounts with Apex. They're $50,000 accounts and a $2,500 drawdown. So Apex uses the 2,500 plus 100. That's what they call the safety net, safety buffer, something like that. So that's $2,600. So I have to get the account to 52,600. Then I can request a payout. The minimum payout is $500. The maximum is 2,000. So you have to get up to 2,600. You can draw down this by $500. So you could have get to 2,600 exactly, do a request for 500 to get approved, and then your drawdown buffer will be reduced to 2,100. However, you can decide when you want the first payout at the safety net threshold, so 52,600, or when you have 3,100 of profit. So when you do a $500 payout, knocks it down back to 2,600, so you still have your full safety net. Or 3,250, so taking 500 out actually leaves you an extra $150, so 2,750. And you can do a custom amount too, but you decide how low do you want to draw into that safety net or not. And then the other things we have are the current account balance. This Apex account right now is at 51,210. And Goldilocks is doing about $87 a day. That's with 2 micro contracts. Everything's based off of micros and micro equivalents. So once you get to 10 micros, it'll switch to a full mini. And you have the start date, which is today, August 7th is today. And then how many days have you traded already? And this account, I think, this is the 3rd day. So it's already had 3 trading days. I'll maybe just put 2 because I don't know if they count today or not. So the next things on here, you have an option to stop withdrawals after the 5th payout. So with Apex, the first 5 payouts are limited. You can only take out on a $50,000 account $2,000 per payout. And then after that 5th payout, there's no restriction. So what you can do is say, just check this, and then that will do 5 payouts to get rid of your limit to withdraw, and then that'll grow the account as fast as possible. So you can play around with some different ideas, like payout amount. If you want to do the full 2,000, you can do that. 20,000 would be nice. After the 5th payout, what percent do you want to withdraw? You have to do on 8 trading days at least $125 a day. Now these are average profits, so you might have some bigger days but some losing days, but the average is what you put in here. And Goldilocks has averaged $87 per day for the last year. That includes all the wins and losses and fees and everything. So you can say, well, I want 75%, but the problem is you have less than 125 here, so it's going to take you longer to get to 2,000. Now, if you can add some other strategies like simple price pattern or some other strategies or some manual trading to bump this up a little bit, say to $130 a day with 2 contracts, and then you're going to start slowly growing it, because after $2,000 are reached, you'll have actually a little bit more. So let's just use 130 for now. We'll just start 87 actually. And it tells you how many that is per micro contract. And then after we have the 5th payout, let's grow the account a little bit faster instead of just keeping taking everything out. And the withdrawal threshold, you have to wait for this much profit since the last payout after applying your percent rule. So basically that means after the 5th payout, you could set this to say 2,500 and 30%. So then after you've had your 5th payout, once your profit, once you do another $2,500 of profit, then it'll take 30% of that, or $750, and withdraw that. Now, this is also a scaling calculator. So Once the account reaches $5,000 of profit, we're going to start increasing it. So Goldilocks numbers per contract are about $1,100 to $1,300 drawdown per year maximum. And if you do 2 contracts, you got to double that. So about 2,200. But if you're adding a third contract, you want to triple that. So that's like 33, maybe. Let's see, could be $4,500 drawdown. So let's get a little bit more than the maximum we've ever seen. Call it 5,000, and then every, say, let's go $1,400 above that, we're going to start increasing the number of micros. Now on a $50,000 account, you can actually trade 100 micros or 10 minis. So let's start out with 50 micro equivalents, because the equivalent means that you have a combination of minis and micros, but the combination total equivalent is going to be 50. So let's just set this up like this. Let's do a payout amount of 2,000. Just calculate it, see what happens. So here's our starting position, and we're making $87 a day. And now we've actually gone through our buffer. And now we've got to the point where we're at $4,500. We're going to take out 2,000. So it's payout number 1 end of September. So September we take out 2,000, and we still have a $3 buffer left over, right? So 2,600, we're $3 over that. And then we keep going on. The contract size hasn't changed. Go another $2,000 withdrawal end of October. So it's taking us about a month to get another $2,000 at $87 a day. And then payout number 3, payout number 4, payout number 5 happens 5 February. So now we've got the last payout. Now our drawdowns or our withdrawals are not restricted at all. And then you can see the accounts just, it's slowly growing. And here we get to $2,500 of profit. We're taking out 30% of that, so we're taking out $750. So the account grew a little bit, and then we took out the $750, and now it's still growing again. And we're still at 2 contracts, and then here we get to the point where we're going to scale to 3 micros. So now we're getting, instead of 87 a day, we're getting 131 a day. And now we got to our next withdrawal, and a few days later, another 783. Now we're down to 6,200, and we're cranking along here. And now we've scaled up another contract. So now we're up at 4 micros. So we're basically double the normal 87. So we're 174 a day. And you can see per month and per year what that equivocates to. And then we keep going. We get another payout, 770 in May. Now we scale to 5 micros. Now we're doing 54,000 a year pace, about 4,700 a month, 48. Now we finally hit our 10K milestone. So that's the first big milestone. And then we get another withdrawal, 30% of our 2,500. And you see the account's growing nicely. So we're in August 6th. Let's see if it goes that far. So a year from now, we'll have 21,595, and we're trading 13 minis at that point, equivalent. So one mini and 3 micros. Sorry, so 13 micros. But we've taken out 1,000. Call it 1,900, 2,650, 3,500 roughly, 42.5, 49. I'll call it about 5,000, 5,800, 5,000 or 6,500, 6,600, something like that. And then another 2,000, so 8,600, 10,600, 12,600, 14,600, 16,600. So we've taken out $16,600, and a year from now, the account would be at, let's go back here, August 7th, $20,000. So we've taken out quite a bit. We still have a $20,000 account, and we've taken out quite a bit of money. So let's change it up a little bit now. Let's go with, let's do $500 payouts to see how that goes. So we get our first payout here, only 500. Second payout is, I guess about 8 days later, and then another 8 days, another 8 days, another 8 days. So in 54 days, we have 5 payouts, and now we're not restricted anymore. So now you can see the account's growing. There's our 30%, taking out 750. So it keeps going, keeps scaling. And by the time we get to August, oops, it doesn't go to August. So end of July, now we've got $100,000, and we've taken out quite a bit of money. Now there's 5,200. There's another 10, 4, 15, 19. We've taken out a lot. I didn't add it up, but it's quite a bit. So that's taking out 500. And the reason that gets more is you're letting the account grow faster. So if you look at the fifth payout, we're already at $3,400 of profit after we took out $500. So it starts scaling quicker. So the first scale on this one, it jumps to 3 contracts here in December. So that's with taking out withdrawals periodically. The next option is, let's just try it without, and before we do that, let's go to the bottom here. So let's go, let's just pick a date. How about December 31st? Let's see what the account balance would be. 7,400, call it, December 31st. Now let's do this without any other withdrawals after the first 5 and go to December 31st. And now we're at 87.59, so that's gone up. Forget what it was before, I have to look. It's 87.59 versus 73. So it's gone up a little bit. Again, you're only making, and you've just scaled up barely in December. So with $87 a day, that's good. However, it would help a lot if we could increase that a little bit. So if we use another strategy like simple price pattern or some manual trading, and just bump this up to say, well, let's go 130 a day. Let's see how that changes things. So 130 day, $500 withdrawal. Let's calculate that and see how we do. So we get our first payout, $500. And the reason you want you want 5 payouts to eliminate your withdrawal cap. But you want the account to go as fast as possible. So you need to take something out, take the minimum, and get the account growing like crazy. So here we have our 5th payout in October, so quicker. And now we have our first scale at the end of October instead of December. So it's quite a bit earlier. And I can see this is taking some withdrawals. So let's just see how it does by the end of the year with 30% withdrawals and $130 a day. You're at $18,000 of profit, and you're doing 10 basically one mini, 650 a day, about 163,000 a year. And that's taking out when you hit $2,500, take out 30% of it. Next thing is, let's see how it is with you just only taking the first 5. Let's go to December. So now, December 31st, you're trading 19 contracts. You've got $30,000 of profit sitting in your account, and you're doing $1,200 a day, $27,000 a month, or $300,000 a year. And that's with one contract, right? So you can see it scales way faster if you don't take anything out. Let's see how fast it scales. So the first scale happens October 30th. Then we go to 4 micros on the 10th of November. 8 days later, we go to 5. 6 days later, we go to 6. 4 days later, we go to 7. 3 days later, we go to 8. 3 days to 9. 2 days to 10. 2 days to 11. 2 days, 2 days, 2 days, 1 day. So you can see the scaling is really kicking in. And now by the end of the year, we're cooking with gas here. We've got 27,000 a month. I'm basically trading almost 2 micros really. And then at some point you can take some money out. Say you wanted some money for Christmas or something. Just the 25th, say somewhere around here, you take out a couple thousand to get some presents or something. But that'll drop you down. So you might want to recalculate things at that point. But anyway, this is a nice tool to show you that ideally, if you don't need the money, your strategy should be withdraw $500 five times, boom, 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 fast as you can, and then don't take anything out and let the account grow and scale the number of contracts slowly. So I hope that helps explain it. It's an interesting tool, gives you an idea of the best way to grow an account. And again, it depends on if you need the cash now versus if you can wait and let the account grow faster. So that's what the whole tool is designed for, some research on what's the best way to grow your account based on your numbers and your risk tolerance and how much cash you need and all that. All right, hope you enjoy it. Thanks a lot.